Hi, Spanish Fork. We are so excited to be here in your library teaching our first-time homebuyers class. We hope that every one of you that's on tonight can hear us, and feel free to ask questions. We are here to answer anything you have and throw at us. Hopefully we'll have answers. We're going to sure try. So we're going to go ahead and get started. Like I said, if you have any questions, feel free to go ahead and type them in. We can answer them as they come in, and let's go ahead and get our party started. I'm Lisa Coombs, also known as the Real Estate Diva. Some of you may have seen my car around town. I do have my name on the back, which makes me a little bit of a better driver. I've been doing this for just over a decade. I absolutely love my job, even in this absolute chaotic market. I love what I do. That's why we teach these classes, because you guys are some of my favorite clients. First-time homebuyers are a blast to work with. My annual volume value is in the millions. That doesn't mean that's how much money I'm making. That means that's how much I am selling. I am constantly learning to better myself, which doesn't mean I always have the answers either, but I try. I have a lot of energy, usually, and you will love working with me. I am nothing if fun, and I enjoy what I do, so that's a positive for me. So I'm going to go ahead and give the mic over to Mike.
All right. Hello, Spanish Fork. My name is Mike Houghton. I'm with American Pacific Mortgage. My background has been operations management for the last 30 years. Continual learning, teamwork, dedication, listening, communication, solutions, and financial budgeting were some of the key components I brought over to American Pacific. This is my first year with American Pacific. The culture at APM is phenomenal. It's about how we can help, and everybody at APM is authentic. It's like working with family. They give you the proper tools, education, and support that make it to where we can be beneficial to the consumer. So I'm excited to be a part of this. And Dave, you want to come up and introduce?
No, you're good.
Good to go?
Let's go. Yeah.
All right, let's get her going.
I'll just go like this. I'm Dave. I'm here.
Okay, so this is our agenda. This is what we're going to be covering tonight. And again, questions at any point are welcome. So first we're going to talk about what do I do first, because I think it's a little bit of a myth out there as to what you should do first, and we're going to make sure that we explain that. How do I find a lender that's right for me? Why should I work with a real estate professional? Specifically, what does a real estate professional do for me? I am not sure whether buying a home is right for me. How do I decide? How do I choose my first home? What is the process of buying a home, and what are the next steps? So that's what we're going to try to cover in our little time here with each other. That's you.
Oh.
Hold it closer.
We're just going to go back and forth here. So this is where it all starts for you. Taking the first steps, and the four main components are credit, income, debts, and down payment. Okay, choosing a lender. Can they provide the program that best meets your financial needs? Are they a mortgage banker or a broker? How long have they been in business, and what is their reputation? Will they consistently communicate with you and all parties involved with the transaction? Will they work together with you, with your agent on your behalf? Oop, missed one. Will they close your loan in a timely manner? Okay. So bankers versus brokers. A mortgage banker controls the transactions.
Sorry. I'm so sorry. That's me. Just not used to
Has
doing
competitive
this.
rates. Sorry about that. Has a superior appraisal process. One of the negatives is sometimes the programs are limited to the investor pool. For banks, they fund their own loans. The loan decisions are made on the customer value. They approve, draw docs, and funds. The negatives, they're a little more stringent on their guidelines, conservative appraisals, limited choices of programs, and the rates are kind of in and out of the market. Mortgage broker, they have access to multiple programs, access to rate options, various property types, The negatives is they lack control of the transaction. They're inconsistent with their communication. They do not underwrite, draw docs, or fund loans.
Did you say which one you guys are?
Oh, I'm sorry. APM is the best of both worlds. We're a mortgage banker and we're a mortgage broker. So we have, being a broker, if we need to find other programs that best benefit the consumer. You wanna take that? You wanna do that?
Sure.
All right. You're good.
Okay, so this is the advantages of buying versus renting. There's obviously a big advantage that your property taxes, your mortgage interest are tax deductible. When you're renting, you're letting that happen for your landlord. You don't get anything out of that. So all the money that you're paying your landlord is his tax deduction, not yours. So that's a huge plus for you. Your property investment earns equity, becoming more valuable over time. So especially right now in this market, I'm sure you're all watching and paying attention to what's happening in the market. Home values are increasing every day in astronomical amounts quickly. And if you're renting, again, you don't get any part of that. You have no equity in that property that you're renting. You can't claim anything. You say, oh yeah, this is my equity, none of that. Control of improvements to your property. So I always like to tell my clients, when you buy a house, you absolutely want to hang a picture on a wall, go for it. Put a nail in that wall. I recommend command hook, but you can put a nail in the wall. If you're renting, you can't do that. You can't make improvements to the home. A lot of times you can't even paint the home, a room a different color, because it's not yours. If you buy a home, you can do anything you want to it. And pride of ownership. You get to say you're a homeowner, which is one of my favorite things for my clients to do is, I own a home. That's you again. Move it closer.
Nope. I'm gonna throw this back and forth. So this is kind of the anatomy of the mortgage payment. It's called the PITI. It's principal, interest, taxes, and insurance. There we go.
We call it a pity because you have to make the payment. Sorry.
Amen to that. Amen to that. Because the PITI represents the total monthly mortgage payment, you can see how the P&I is the principal, interest, taxes, insurance, and then of course the total is the PITI. One thing about mortgage insurance, typically it's required on a loan that has less than 20% down payment on it. And it doesn't happen for all loans, but for a conforming, conventional. And then there's other, like the FHA, it'll actually have MIA insurance that could last the whole duration of the loan life. So,
Let me just say one thing real quick.
oh, sure.
So if you're an analytical brain, this totally works for you. If you're an emotional brain like I am, this is not fun for you. But what you need to remember is if you do put 20% down, your mortgage insurance is gone. You don't have to pay mortgage insurance. You don't have to put 20% down though. That's what Mike was saying. There are programs and loans that you can put 3 to 5% down. You'll have to pay mortgage insurance, but for this particular point, this is just kind of giving you an outline of where your money goes when you make your payment. Hopefully that makes sense. I mean, I can talk about it, but not as well
There
as
you
you.
go. So these are the types of loans that we were kind of discussing, the conventional. They have loan amounts up to $548,000. They can go as high as $822, depending on the state. And like Lisa said, you can put as little down as 3%, depending on the program that is chosen. It's usually a single family condo or PUD community. There's 3 government-sponsored type loans: the FHA, the VA, and the USDA. And then the last one is the jumbo. And the conventional is a conforming loan. It stays within the standards of Freddie Mac and Fannie Mae. Thank you, Dave. And the jumbo can go up to as much as $3 million, and that's usually where Lisa's at. So.
If you qualify for a jumbo loan as a first-time home buyer, let's go.
Right, absolutely. The first-time home buyer, there's a variety of different programs typically available to those who haven't owned property in the last 3 years. So even if you owned property 5 years ago, you could still qualify as a first-time home buyer, as long as you haven't had that within the last 3 years. One thing about the first-time home buyer programs is you can't always qualify for that. There's income and different variations that kind of are involved there. So you just need to check with your loan officer. The two types of rates, there's fixed rates that are, the payment never changes, typically higher than the ARM start rates. And it's a more conservative option, but you know exactly what you're paying month to month. The adjustable rates usually, well, they'll start out low and then increase over time. They can be beneficial depending on your situation. Let's say you plan on moving within 5 years, and if you can do an adjustable rate that keeps that interest rate low for the first 5 years, then that's going to be a benefit to you. So make sure that when you're discussing your different options, make sure to tell your loan officer exactly what you're doing, what your plans are. Okay, so to go into the government loans a little bit more, the FHA, it's government insured. They have their MI that's already it's already on the loan. In some cases, it can be on there for I think 11 years, but for the majority of them, it's kind of the life of the loan. So it's a good way if you have to get started. You can usually have a little bit lower credit score to get into an FHA. You got to have 3.5% down. You're able to use 100% gift funds, and majority of the loans you need to have a credit score of around 620. The VA, of course, is a veteran loan, 100% financing. You don't have to have any down for this, and you don't have to be a first-time home buyer either. And there's no mortgage insurance, which is nice. The USDA, it's for the rural community, 100% financing. You just have to get with your loan officer to find out exactly where these areas are. I think it's south of Spanish Fork River, west of the lake, and west of Jordan River. So
For Utah County.
for Utah County anyway. So.
And it's Tooele and that area.
Okay, there's 4 stages basically for qualifying for a loan. We're going to talk about the 4 of them: credit, income, employment, asset, and property. Okay. I don't know if you want to take this one.
No, go for it.
Okay.
I'll
Okay,
hear it if I
so,
want to.
you know, what affects my credit score? You can see the graph there. As you can see, 50% of the credit score is credit history and length. It's beneficial to be utilizing your credit. The one thing you don't want to do is have credit transparency. And what I mean by that is if you're not using your credit, then it can dissipate or maybe even never be created. And if you don't have a credit score, a FICO score, you ain't going nowhere. You're basically at the bottom of, you're worse than poor.
But if you are credit invisible, your lender can help make it so that you are not credit invisible anymore. And what that means is, like he said, it means you have no credit established, you don't have a credit card, you don't own a car, any of that type of stuff. And to buy a home, you have to have credit and a FICO score. So make sure you're talking to your lender and seeing, because they can do a soft pull and just say, oh yeah, you have this credit or you don't exist. And then we can kind of get you into the right steps to make sure you get some credit established.
And one thing you can do is you can get a free credit report annually at annualcreditreport.com. Another good way to check is you can actually get on Credit Karma, and it'll only pull, it does kind of the soft pull thing, it only pulls one of the 3 agencies, but it'll kind of give you an idea of where you're at. It won't give you the exact, it'll kind of give you a basic idea.
But I like Credit Karma because it like you said, it tells you where you are, and then it also will email you if there's a change to your credit, if it gets better or worse, or if somebody's pulled credit, so you can kind of keep an eye on it. And like you said, it's not an exact number, but it's so close that, you know, if it says you're at 650, you're close enough that we can kind of start working those numbers and manipulating it.
Okay, your score is important. On most loans, it's 600 or better, usually about 620. Some loans will go lower than that. You just have to talk to the loan officer. There's different programs and so forth, but keeping that credit score up is critical. You can't have any open judgments or tax liens. One open and active credit line in the last 12 months. Don't always have something up, open, something going, something you're making payments to, because that helps build your credit. Hey, you know what? I've got this $500. I'm going to go ahead and pay off this $300 loan that I have. But sometimes that's not always the best, because you're building credit by making those payments, because the interest usually isn't very much, and you just want to have something open and payments continually going out. And then there's specific waiting periods for derogatory events. These are foreclosures, short sale, and bankruptcy. One thing to keep in mind is usually the lower the credit score, the higher the interest rate. Okay, so keep that in mind. You want to build that as high as you can, because it's your benefit. You're going to get approved, and your rates are going to be a little bit better. Okay, so a foreclosure. What's a foreclosure? This is when the lender seizes the property due to default. Payments aren't being made by the buyer to the lender. Short sale is kind of the thing that happens right before the foreclosure. It's going into foreclosure, but then the lender approves the consumer to go ahead and sell the property at a discounted rate, but it has to be approved. And then you have a Chapter 7 bankruptcy. You know, your bankruptcies are never good. Chapter 7 is the worst. It's known as a liquidation. It's a legal option to clear some or 100% of your debt, but you lose basically everything. Chapter 13, it's not as bad. It's another legal option to get rid of some debt and have a discharge, but you can keep the property, and they'll usually work with you 3 to 5 year plan to get everything caught up and repaid.
Hopefully none of this affects any of you guys though.
Right, none of you guys, right?
First time home buyers don't usually have to worry about that, so.
Well, you know, life happens.
Yeah,
Life does
exactly.
happen, so. Okay. So just to show you, I mean, the different things that damage credit and affect your score. You know, maxed out credit cards. Well, I'm still making payments, yes, but you've got them too high. You need to make sure that they're nice and low. Late payments are a killer. I mean, look at the points there, down 60 to 80 if your score is at 680. The higher you score, you get knocked even more. So payments, just stay on top of them payments. Debt settlement, and of course the foreclosure and the bankruptcy. These, you can see they drastically affect it. It doesn't take much, so make sure and stay up on them payments. So, for credit improvement, like we had said before, review your report annually. Or like she said with Credit Karma, get an account with them so that you know they're alerting you with different things that are going on. Pay your bills on time. Keep revolving credit balance. Keep the limit ratios to less than 30%. 10 to 20 is optimal. Keep a good mix of credit, revolving and installment. Don't close the unused accounts. Keep them open.
Unless your lender tells you to. So don't do anything to your credit until you've talked to the lender, because they will tell you the best options for your situation.
And then minimize the inquiries by applying for credit only when necessary. When you're shopping for a loan, focus in a short period of time, because I think they allot you
14 days.
like 14 days. So let's say you had two different mortgagers that you were vetting and you wanted your credit pulled. If you did it within the 14, then you could actually have it ding once and not twice. Is that correct?
And I always tell my clients, don't have them pull your credit until you've decided who to go with. Because they can do a soft pull, and that's totally fine, but I wouldn't have anyone pull your hard credit until you've decided who you're working with. And then you don't have to worry about it.
Yeah, especially if your credit scores, you know, are kind of,
Yeah, if they're a little shaky.
yep. Okay. Income and employment. So 2 years employment is required, same line of work preferable. Let's say you just graduated school, schooling can count as job history. Commission, overtime, bonus income, they all have to have a 2-year history of receipt, and then they're usually averaged out. Depending on how that is, let's say I was getting 20 hours consistent overtime last year, but this year I'm only getting 10. It's still showing that you're getting that overtime, but they're not gonna average it for the 2 years, they'll do it off the 10 hours, okay? Job gaps may be okay, depending on the case. You know, if you get laid off in November and you're back to work by January and you're in the same field, okay? And then self-employment, needs 2 years of filed tax returns. And then that's just, averaged over the 2-year span. One thing to keep in mind if you're, let's say, a waitress or somebody that gets gratuities and tips, if you're looking to want that income counted, you've got to count that on your tax forms at the end of the year. I know that's terrible, but if you want that to count, it's the only way it's going to be able to help. Because if you haven't counted it, then it doesn't help you right now. Okay, debt to income, DTI. Okay, you've got your gross income, and this is where you go off of gross, don't go off of net. It's your gross income, and your debt is divided by that, okay? So they have a front-end ratio, and they have a back-end ratio. The front-end ratio is when just your house payment is divided by your monthly gross income, and then your back-end ratio is when all your debts are combined together. So your student loans, your auto loans, your car leases, signature loans, child support, alimony, and collections. For income, full-time, salaried, or hourly, you need 30 to 60 days worth of pay stubs. Part-time, you need to have the 2-year history like we had said before. Self-employed, 2 years of employment, and then commission 1 to 2 years, and then that'll be averaged out.
Just real quick, on student loans, I know that a lot of people have them deferred right now, but
Everybody has them deferred.
I think they're still counting them though, right? So just because they're deferred, they're still counting your student loans as part of your debt.
Correct.
So
Good point.
just because they're deferred.
Okay, let's talk about assets. Okay, ideas on down payment. First and foremost, save. You know, you've got to be able to save. Gift funds from relatives is fantastic.
And we don't care if you pay it back.
Retirement, 401k funds. I've had to do that myself. You know, you got to do what you got to do.
Yeah.
But it works, and I'm in a home, so there we go. Stimulus checks and tax refunds. You know, you get them big chunks, and if you're like me, it's like, man, you just want to spend that money. But it's good to throw that right into savings, especially if you're looking for money for a down payment.
But I would say on the down payments, before you go any route, I would talk to the lender, because your 401ks, there's tax implications on some, so just make sure you're talking to a reputable lender about what you're gonna do as far as your down payment goes.
Okay, one thing about the down payment is you've got to be able to verify the funds. Okay, down payment, closing costs, you gotta remember that those are two different things. Okay, so acceptable sources of funds, checking, savings, stocks, mutual funds, 401k like we talked, the gifts. gifts have got to be traceable. Okay, let's say I had a father-in-law that was a stud, and he loved to keep cash at the house, loved to keep it. And if he was to come to me and say, here's $20,000 to put down on this house, well, I'd have to wait at least 60 days to season that money, meaning it has to be in your account for at least the 60 days to be able to utilize them funds. If not, then you've got to be able to trace them. You got to trace the funds back to who gave it to you, and it's got to be coming out of an account. It's got to be traceable. Okay.
Really, what you need to remember, I know cash is king, but not when you're buying a house. So everything you do when you buy a house has to be traceable. So don't take cash from your family members as your gift. Any of that stuff, you have to be able to trace everything we do with buying a home.
But do take the cash so you can buy new furniture for the home.
There you go.
Okay, and then property. Okay. So the appraisal has to come in equal or greater to the purchase price. Property must be in good condition unless purchased as a renovation. One thing about, let's say the appraisal comes in at, let's say 420, but the purchase price is 400. That's what the lender will actually lend to. And vice versa, if the appraisal comes in at 400 and they're wanting to sell for 420, the best we can do is go to that lower amount. The lower of the two is what we can utilize as far as on the lending side. But we have some different things. If you have large down payments, 10 to 20%, depending on some different variables, it might help you with that as well. It's called an appraisal gap, but you just have to reach out to the lenders to, at least us, to find out what that is. So, you know, with the VA and FHA, they have very specific conditions of property. So they really look through on the mechanical systems. They all do on the appraisers, but the VA and FHA, they're really critical on these things. They'll look for paint that's coming off the walls, cracks, wet spots. These things they'll actually make, they'll require these to be repaired before the loan can go through, correct? Okay. Which is in your behalf, but they are really meticulous. Handrails is all part of that, any health and safety issues. I don't know why that just doesn't come up on there. So this just kind of throws you through the loan process. You know, to start, you get the pre-approval. And you find this beautiful lady right here, Presidio, and she helps you find a home. You have the initial disclosures, goes through processing, appraisal and inspection, underwriting, final approval, signing, closing, and funding, loan documents, and then the CD. And there you go. You're in your hopefully big house. It's a small house, but for the money now, that's probably
right.
It's probably pretty accurate.
So this is kind of what I was talking about at the beginning. This is where it's important that you understand as first-time homebuyers. Don't call me first. Call the lender first. One of the worst things about my job is if I have somebody call me and say, hey, we want to go look at this house, and I don't do this anymore because I've been doing this a long time, but we would go out and look at these houses, and then they'd call the lender. We'd look at this $400,000 house, and the lender would say he qualifies for $380,000. Well, now I get to break your heart because you can't buy that $400,000 home. So please, please, please make sure you talk to your lender and get pre-qualified way before you call a realtor. I can't really do much for you until we know what you qualify for, especially in this market. So keep that in mind.
And there's so many variables that go into it, so yeah, definitely talk to your lender. Okay, so for a smooth and quick process, credit. Credit card balances below 40% max limit. Oh, sorry. Talked about being credit invisible. Make sure that you're making payments, but you're being responsible. When you're renting, don't pay with cash. Have some traceability, checks, Venmo, auto drafts. It's nice to have that history of being able to make that payment. That helps with the underwriting process. So do not pay with cash. 2 years employment, W-2s, tax returns, pay stubs for 30 days. And like it says, be prepared to explain gaps in employment or unemployment. Okay. Avoid large deposits and withdrawals from your bank account. When you're going through the loan process, they look at every single thing, and you send in your statements, and then later on in the loan process, you're asked to send them in again. These are the different things that they're looking for, okay? And they will question you on all the amounts, whether they're large deposits or withdrawals, okay? Obtain a pre-approval letter, like Lisa had said, from an independent mortgage professional like myself or Mr. David. And then use a local real estate agent. And I've used Lisa twice, and she's fantastic. She helped me sell a home and buy a home, so.
True that.
She'd be great.
And just so you understand, with this market where it's at, the pre-approval letter, 99.9% of all sellers are requiring that up front, just because they want to see. And as a seller's agent, if I get an offer that says, oh yeah, Mike says so-and-so is qualified for $400,000, I call Mike and say, tell me what's going on with this loan. Is it real? Is it accurate? So you need to make sure that you have that in place so that when we do find your dream home, we can just send it in and say, yep, we are golden. This is gonna close fast. We're gonna move along, and it's gonna be fine.
Okay, you wanna do this one?
Sure.
All right.
Why not? So this is going to talk to you about the things not to do when you're getting ready to buy a home. There's some big things. So when you come in and you say, hey, we've talked to Mike and Dave, we're ready to go, we've qualified, we're all set to go, we're going to tell you multiple times, do not go out and make any major purchases until I hand you keys to your home. Because if you go out, and it does happen, where you sign all the documents, you think you're good, and you go out and buy yourself an F-150, you have just messed up our loan, and we have to start over. So no big purchases until I hand you keys to that house and say, you're good, go spend your money. That's an easy one. If you have something coming up, like you already know you're taking this big vacation, you're going to, I don't know where we can go right now, but somewhere fantastic, and you already know about it, tell your lender so that they can plan on that being part of your process. Don't change or quit your job. Please don't change or quit your job. Now, I have had clients that have had a job and they have said, you know what, we're changing jobs, but we're still in the same field and everything's gonna be just the same. And that again is something you're gonna talk to the lender about. Just make sure any changes that are gonna happen, they're aware of them. Consult with your mortgage professional before making any withdrawals or any deposits, because they will come to you and say, where did this money come from, or where did this money go? And they are watching that, and it is just kind of a process that you have to go through. So if you're gonna be making any big changes, let them know. Do not pay anything off unless your lender tells you to. I know that sounds crazy, but a lot of times they'll say, it's giving you credit, leave it there where it is. And if you have something that you have, you've paid off this credit card, you're so excited and you wanna close it, sometimes they'll tell you not to, because again, it shows that you have credit and that you're a good risk and that you're making your payments. So don't make any changes to your credit unless you talk to them about that as well. Avoid using cash. We've talked about this a whole lot. And I love cash, I really do. But it's not traceable. We can't go back and say, oh yeah, you must have done this, this, and this. If your landlord is saying, no, I prefer you pay me in cash, tell him, look, we're trying to get ready to buy a home in the next year. We need to be able to track what we've done. Honestly, if he's wanting you to pay him in cash, maybe ask why. Don't have your credit report pulled too many times. It can hurt your credit. Soft pulls don't hurt them nearly as bad as hard pulls do, but any pull hurts your credit. So just be cautious about that. I watch my credit all the time. I'm on Credit Karma probably once or twice a month just to see. And like I said, I do get emails from them if anything has changed, good or bad. It'll send me something and it'll say, good job, your credit's doing great. I'll still go check it just to make sure that it's doing what I think it should be doing. So just pay attention to your credit and where it's at and where you're going with it. It's easy as that. Oh, this is the path to homeownership. Once again, we're just gonna beat this into everybody. please get a pre-qualification from a reputable lender. I love working with Dave and Mike, and I'll tell you why. I work 24/7, especially in this market. We're working all the time. I need to be working with my team that I know if I text them on a Saturday at 8 o'clock at night, they're gonna respond to me. They may not be able to give me an answer, but they will at least let me know, hey, we'll get right on that first thing Monday morning. That's why you need to find someone that has your back. Then after that, we're gonna go find a home, which is my favorite part. We get to go in and just look and play and all sorts of things and have a lot of fun doing it. Then you're gonna go to processing and underwriting. This is I kind of wanna say the legal mumbo jumbo, but that's what I say when we see the slide about contracts. This is just the things that have to happen for you to buy a home. That find a home number 2 is the fun part. The rest of it is the parts that have to happen. Sorry. You're gonna get a conditional approval, which is gonna tell us we're good, as long as nothing catastrophic changes, we're in good shape. Final underwriting approval, closing documents, and then move-in day. And that's my favorite too, is I get to hand you keys and say, congratulations. Not all real estate agents are the same, but you should definitely get one. Some people can't work with someone like me because I'm a lot. I do have a lot of energy. I'm always happy and going. Okay, I can't say that. I'm not always happy. If my kids are watching this, they will tell you that's not true. But I'm always trying to be excited and energetic for you. Some people, that's not their cup of tea, and that's fine. But you definitely need to work with a real estate professional, especially in this market. This is such an intense market, and there are so many things that can go south on you that it's just not in your best interest to not have someone like me in your corner. I have multiple resources to help you find your perfect home. We have the MLS, we have UtahRealEstate.com, we have for sale by owners, we have people that have their house on the market and pulled it off, we call those expires. I can find pretty much any of those. I can tell you your types of home. We set you up on, it's called a listing alert, and it comes to you as often as the criteria fits in. Sometimes it's daily, sometimes it's every other day. It just depends on what you're looking for. Bedrooms, bathrooms, square footage, acreage, all that stuff. I can help you with that. Area and location. And as a buyer, you get my unlimited professional help. And if you text me at midnight on a Saturday, I may be asleep, but I will respond to you as early as I get up on Sunday. So just know that that's what you want. A buyer's agent works for you through the entire process. I do all the negotiating. And there are times that the negotiating is happening that you don't even know about. And that's what you need to make sure you understand is happening, that you're being safe then. My job is to protect your money. I don't want anything to happen to it. I don't want you to call me in the middle of the day and say, what's going on with my money? My job is to make sure it's always safe. I do all the negotiating, like I said, multiple offers, which is happening almost on every deal right now. All your paperwork, pricing, I'll tell you whether the price that they're asking is fair or not. That's my job, and that's why you hire me. Okay, this is the contract. This is just the first page. There's 6 pages of this. And if you could see this, you would understand. It's very legal mumbo jumbo because lawyers wrote it, and I can say mean things about him because my brother is one. But this is just the first page, and it talks in depth about stuff that I don't understand why we can't just write a document that says, I'll give you 5 cows for your home. But this is where we are. So this talks about all the legal information on the home, the tax parcel ID, if there's any water rights, if there's any, anything that's included in the sale of the home, like if they're leaving the refrigerator, if they're taking their washer and dryer. This is where it's all put. This is the loan information that talks about the earnest money that you give, which we can talk about that too, and what your purchase price is going to be. Like I said, this is page 1 of 6. 5? 6. There's so many documents I can't tell you for sure. So this is why you want to have a professional helping you, because this is way over even.
It's like reading a foreign language.
It really is.
You need somebody to decipher and tell you exactly what it is, because it's stressful. It's stressful, and you need to have Lisa to kind of have this make sense.
Well, I've done this enough that I can read the document upside down when we're sitting across the table. So you just need to make sure you're protected. It's your money, and honestly, this is probably going to be the biggest purchase of your life. So you need to make sure that you're ready and protected. Special value for first-time home buyers. We have a step-by-step partner through the process of real estate transactions. And when you decide it's time to buy a home, it's not just a realtor and a lender that you will deal with. You will deal with an inspector. You possibly might deal with a tax accountant or an attorney or heaven forbid, a termite remediation, all that kind of stuff. But your realtor and your lending team, as long as you have top-notch realtor and lenders, you're going to be taken care of through the entire process. We'll help you understand the market, values, programs, implications of decisions, and more. And the implications of decisions are just crazy things right now. Sometimes people are saying, this house is listed for $350, we want it really bad, so we're going to offer $370. That's money out of your pocket that you have to come in with, because they're not going to give you more than the appraisal's worth. That's an implication to what you decide, and my job is to make sure you understand what happens when you do that. Our goals are aligned. We get what we want by getting what you want, and what we want is you to be happy and successful in your first home. We remove confusion and help you know what you don't even know you need to know. I have to read that because I can't say it fast.
Right?
But that's what we're here for. We help you know when to engage other professionals, such as an attorney, an inspector, and financial partners, if we ever need to have that taken care of. How to choose my first home. This is my favorite part. Consider what is important for you. What you qualify for and what you should spend are not the same thing. So if you come in to the lender and he says, oh, you have excellent credit, you make great money, you qualify for $500,000, that doesn't mean that's what we should spend. You can come to me and say, yeah, we qualify for $500, but we really want to stay down in the fours. Perfect. Because I don't ever want you to call me in the middle of the night and say, we can't make our mortgage payment, because neither can I. So you need to be thinking, just because you qualify for that much home does not mean you need to spend it. How big of a priority is your home versus other things in your life? If you just got married a year or so ago and you guys want to start doing some traveling, if it opens all the way back up, then that's something you guys have to decide if that's more of a priority for you than buying your first home. Go for it. Live your life. How long do you plan to stay in this home? That's going to go back to the lender, because it does make a difference in your loan and how much down payment you need and all that stuff. Will you sell it when you move or keep it as an investment property? Start your investment portfolio. I highly recommend that. It's not always feasible or something you want to do. Is your work commute important? Home office. That used to be an important thing for people, but now we're all working from home, so it depends. I mean, do you want your home office to be on the other side of the house from the kids and all that fun stuff? Do you have children? Are schools and neighborhood important to you? Look beyond the surface and be creative. Remember that just because you walk into a home and the kitchen is painted eggplant purple, that's not a reason to not buy the home. So just keep an open mind about it. Be patient, but always be ready to act. Again, that's a different piece than it was when we did these classes 2 years ago. Right now, it used to be that I could say, yeah, we've looked at 5 houses, take the night, think about it, let me know. Right now, we're gonna say, we've looked at 5 houses, you need to let me know tonight, because they're going that fast. Use resources, inspectors, contracts, etc., and I will tell you when and where we're doing that. How do I know if it's the right time for buying a home? No one knows the future, and my crystal ball has never worked. If it did, we'd all be living in homes already, and this would be a moot point. Things to consider: what are your long-term plans? How much money do I need up front? Down payment, closing cost, etc., because those are 2 different numbers. Interest rates and what do they mean for you, and a mortgage consultation. The thing you need to understand is talking to Mike or Dave doesn't cost you anything. It's just knowledge, and it gives you a step up for people that aren't talking to their lenders. So even if you want to just call them and say, where am I at? And they can say, you know, you're great here, here, and here, and you can say, perfect, we don't want to do anything for 6 months to a year. Great, at least you kind of have an idea of where you are and what you need to do still, hopefully. Process of buying a home. We've kind of talked about this stuff several times already. Get pre-qualified, get a realtor, choose a good team of professionals to work with. I like to say that I work with the best of the best in the industry, because that's the reputation I want to maintain for myself. So make sure that you find someone that you're comfortable with. Target your home search and look at a number of homes. I have one client that we have been looking for a home for over a year. I'm not going to pressure you to go any faster than you want to go. So if the right home hasn't come up yet, we'll keep going. Put in an offer, complete due diligence. This process is there to protect you. We'll talk about that. Close, move in, and start making some memories. My favorite part. Okay, you're gonna make an offer and go under contract with that beautiful 6-page document we saw a minute ago. There's deadlines on this contract. Again, this is why it's so vital that you have people that are watching your back. So what you do when you find a home that you like, You're gonna call me up and say, hey, we love that home you showed us today. We wanna throw an offer at it. Awesome, so I'm gonna put it all in there, I'm gonna send it to you. There's a few things that happen at that point. There's what's called earnest money, and earnest money is gonna tell the seller that you're very serious about buying the home. That earnest money goes towards your purchase. So if you say, we wanna do $5,000 in earnest money, that's gonna go towards the purchase price of the home. What you do with that is after they've accepted our offer, within 4 days, you give me that check and I put it into our trust escrow account. Thank you, Blake. Whew.
And not cash.
No, not cash. And we put it into an escrow account where it stays during the duration of this process. We cash the check, so just know that it's there. Then we have 3 deadlines where I can get that earnest money back for you if there's a problem that we don't like. The first one is the seller's disclosures. It's another 6 or 7 page document that the seller fills out, and it just talks about everything that they are aware of on the home. If there's ever been any rodent problems, if the roof has ever leaked, if the plumbing has ever had any problems and been repaired, if there's been termites, if there's been anything like that, if they send that document to us and we look at that together and go, oh my gosh, holy cow, this is nuts, we can't, they're not willing to make any adjustments for us, they're not willing to come down in price for us, then we say, okay, thank you for that, we're out, bye-bye, and I get your earnest money back to you. There's a deadline though, so let's say the deadline is May 20th, and you wait to tell me on May 21st, I can't get that money back for you. Then we have the due diligence, and that is where you have a home inspection done. You are not, in the state of Utah, you are not obligated to have one, but I won't buy a house without one because you don't know what that house has inside. So the inspector comes in, he spends about 2.5 hours looking through everything. He doesn't go into the walls, but he checks your plumbing, he checks your electric, he checks the roof, he checks your insulation, all of that fun stuff. And then we meet him for that last half hour, we go over that report, and then he emails you that report. So let's say we get the report and you're like, holy cow, this house is a money pit. Again, if the sellers aren't willing to make any adjustments for us or make any repairs for us, then we go back to them and say, okay, we're sorry, but our due diligence period, you're not willing to do anything, we're out. Get your earnest money back again. Your third and final opportunity to get your earnest money back is these guys, your financing and appraisal. So while all of this is going on, these guys are working on your loan all the time. They're constantly making sure that your verification of employment has been done, you've got the money in the bank, you've got all of these check marks, ding, ding, ding. And then we have the appraisal done. Now with the appraisal, let's say the house is $400,000 and we've offered $380,000. Yay us! That's $20,000 because the seller can't negotiate the price up. So we're good, we're golden. But let's say that we've offered $400,000 and the appraisal comes back at $380,000. I had to think it through. Make sure
That
it
happened to
wasn't
us.
But let's say you've offered $400,000 and the appraisal comes in at $380,000. We go back to the seller and say, sorry, your appraisal's at $380,000 because, like Mike said earlier, you cannot get a loan for more than the appraised value. No matter how nice you ask, they just won't do it. I tried. So you go back to the seller and say, look, your appraisal came in at $380,000. If the seller says, awesome, then we now have to buy the house at $380,000 and not $400,000. But if the seller says, no, I'll wait for someone to come in with the cash difference. We're done, we cancel our contract, you get your earnest money back, and we're done. Now, if you wait and all 3 of those deadlines go by and then you call me and say, we've decided not to buy the house, I cannot get your earnest money back. So just understand, and we go over that again and again and again through the whole process because I don't want to do that to you. And I will tell you, in my entire career, I've never lost anybody's earnest money, ever. So I'm very careful about what I'm doing. Current market conditions, the elephant in the room. It's a fantastic time to be buying a home, but it's also a very difficult time to be buying a home. And like I said, I love, love, love working with my first-time home buyers because you're excited, you're energetic, you're fun, but it's also a very challenging time for you because there's not a lot out there right now, and a lot of people are coming in with extra cash over the price, the list price, and it makes it a little rough for you. Does that mean that we can't do it? Heck no. We can make it happen. It may take some time and we may have to learn to be patient, but we can definitely get you into a home. And the interest rates, we've got to kind of watch those too. We don't know what they're doing right now. The next steps for you guys as first-time home buyers, You're gonna choose your team. We do have some special opportunities for those in this class that work with us. I don't know what they always are because it's slender sometimes. More importantly, again, you need to choose someone to work with that you're comfortable with. Build a roadmap to home ownership. It starts with a mortgage consultation. Don't feel pressure and have fun and enjoy the ride. Again, biggest purchase of your life, just have fun making it. Don't stress it. Don't worry that, we're gonna show you 5 houses and you have to pick one. That's not how we work. So just have fun and enjoy the ride. I don't know if you want to add anything.
The one thing about, sorry. I get yelled at by the lady back here. Like Lisa said, don't feel pressured, we're not a used car dealer, and we're just here to help you, and we're not gonna get you into something that you don't want, okay? There's a lot of different options out there, and we'll do our best to make it right for you, and if it's not right for you, then it's not right for us, okay? Anything?
So any questions, I guess?
There is a lot of things that you guys want to consider, and as first-time home buyers, if you've never really dealt with big purchases and that type of thing, that's why it's important that you talk to a lender or a financial planner and that type of thing, because if inflation or interest rates change, it makes a big difference in your buying power. So just make sure that you're paying attention and that you're being taught and educated along the way. Like I said, if inflation continues to go up, it's going to make a difference in what you can qualify for and what kind of a home you can purchase. So, and I tell my first-time home buyers this all the time. Let's say you're comfortable making a payment of $1,800. You're good doing that. It may be something that you have to consider saying, well, we can be comfortable, it's just not as comfortable to go up to $2,000 to get you into a home. There's always going to be the what ifs and the oh my gosh and all that kind of chaos, but that's why you need to make sure you're working with professionals that can help guide you through that. Any questions?
And as far as buying that first home, it's a stressful time. So make sure that you have your debts under control. When I purchased my first home, I won't say how many years ago, 30 years ago or so.
That wasn't me because I'm way too young for that.
No, but like my first, getting paid bi-weekly and one of my checks wasn't even covering the mortgage. But we made sure that we handled all of our other debt so that we could make this, because this was what was important to us. Okay, so get your debts in order, save some money, and then make the right decision for yourself and the right time.
Do we have any questions? Okay, so that's it for us for today. This is our information. Feel free to screenshot it, whatever you need to do about it, and reach out to us anytime. If I don't respond to you right away, I will get back to you. Just give me some time. But we'd be happy to talk to any of you and give you any more guidance we can, answer any more questions for you, just to kind of help you get along the way. And that's been our job and our goal tonight, is to just get you comfortable enough that you can ask the questions. So reach out to us anytime. Thank you for watching and enjoy your night.
And one more thing, like Lisa said, maybe you're not quite ready now, but you can actually come in and fill out an application where we can actually walk you through the process and kind of help and guide you over the next 6 months to a year and get you to a point where you're ready. That's just what we do. We're not getting paid during that time. We're just here to help, and we want you guys to be homeowners, because there's nothing more exciting than that. Hell, having kids.
Sure.
Anyway, thank you guys so much for joining us tonight.